Welcome back to my channel. Today we're going to cover one of the most trickiest yet most powerful aspects of trading, anticipating market reversals. Now I'll be the first to tell you that predicting market reversals is not for beginners. It is a skill that takes time, practice and a solid understanding of market behavior. In fact, if you are new to trading, you are much better off trading within the trend rather than picking tops and bottoms. This video will break down the key techniques that can help you anticipate reversals in a consistent and systematic way. By the end of this video, you have a clearer idea of when markets might be getting ready to turn around and change direction. More important, how to approach these setups with confidence and discipline. So first of all, I always start with the H12 because the H12 is my key time frame for my directional bias on price. So what I want to see on price is a certain trend, price trending. At some point in this move, I want to see a swing low being formed. And below this swing low, there's liquidity resting. So what I want to see is price running that low and then pushing back up immediately to close as a liquidity sweep. So at that point, I have a liquidity rate. Right now, in this area right here, I'm going to zoom into the hourly time frame and look for my market structure breaks. So at that point, we have a H12 liquidity sweep and potentially a hourly market structure break. So at that point, we have a H12, H1 breaker zone, which I can use to anticipate a reversal to occur. On the other side, for shorts, I do the exact same thing. I want to see a certain trend. I want to see a swing low being formed because there's liquidity above there, right? I want to see price run that high and immediately close below it. So we have a H12 liquidity rate. So at that point, I want to see a H1 market structure break inside of that area. So in this region right here, I zoom into the hourly chart and look for my market structure breaks. So it's a pretty simple concept. I try to keep it as simple as possible. So this way you can't make mistakes or the margin of error is very little. So H12 liquidity sweep, H1 market structure break, and then I draw my H12, H1 breaker zone, and from there I can anticipate a reversal. So let's break down how it looks like on a real price chart. So right now I'm going to showcase an example on EUR/USD price chart. I'm going to show you how I anticipate reversals using EUR/USD for this example. And like I said, H12 is my key time frame for directional bias. It's a very underrated time frame, but it's a very powerful time frame. I do all my trading of the H12. It's my main tool basically for price action trading. You can see how H12 is going higher here. It's trending up, and you can see how it's pushing higher. And right now you can see that it has taken out this H12 high, right? So at this point we can go to the H1 because the first stage of a reversal is a H12 liquidity sweep, the most important part. After that, we closed as a sweep here. It's a confirmation. We can go to the H1 and look for market structure. So on the H1, you can see that we ran this high, we broke down, and this is the last swing low before the sweep on the H12. So right now we can mark out this zone here as our area for potential reversal. Right now, I extend this level. So this gray area is a H12, H1 breaker zone, right? So with a H12 liquidity sweep followed by a H1 market structure break. So at that point, we can mark out our gray box, whatever color you prefer, and that area we can use for potential reversal. So right now we can see prices trading back into the level, and then you can see how it has responded to it. So it came back into the level, one time reversal, push up, reaction, push up, and then eventually it reversed lower. And if we go to the H12 right now, you can see that price is even going lower now from here. And you can see we have a big reversal happening here on price. Here it was bullish, but it all changed after the H12 sweep and the H1 market structure break. So this is a very clean example of how I anticipate market reversals. Right now, after this going lower, we are bearish and can look for shorts all the time. So another example on EUR/USD price chart, H12 trending lower as you can see. And now we are going to wait for our first sign, which is a H12 liquidity sweep like mentioned before. So right now you can see the price has taken this low here. So right now we have a H12 liquidity sweep. So at this point, we can go over to the H1 and look for our market structure on the hourly. And in this example, in this case here, this swing high here is the last swing high before the H12 sweep. This level here is our H1 market structure level. So right now I have to wait for the hourly to trade and close above this market structure level. So right now, as you can see, the hourly has closed above the hourly market structure level. So we can mark out the H12, H1 breaker zone. And if you want to learn more about breaker zones, join my group, because breaker zones is a concept we use to define our entries and managing risks as well. So right there. So this gray box is representing a H12, H1 breaker zone. So now we can anticipate a reverse to occur from this box basically, because H12 is trending lower, but now we have a H12 sweep and a H1 market structure break, which formed a H12, H1 breaker zone, which is a very powerful combination for reversals basically. Right now you can see our price is pushing up from it, and and even going higher now. So yeah, you can see how price was bearish here, but it all changed after price gave H12 liquidity sweep and a H1 market structure break. So if you go to the H12, you can see we are reversing pretty heavy because it was bearish here, H12 sweep, and then you can see it going higher very, very hard. As you can see, it even took out this high again. So a very strong pattern for reversals. So now I'm going to show you another example. So right here, you can see that H12 is trying to break higher here. We're going to wait for a potential reversal, starting off H12 liquidity sweep. So right here, you can see we are trading higher. The price has now taken this H12 swing high, fractal high, and it took liquidity above this high now. So at this point, we could anticipate a reversal lower to occur because price is now bullish. It took out the H12 liquidity with a sweep, and now we go to the H1 and look for our market structure level. And right here, this swing low here, MSB, this swing low is the last swing low before the sweep. So right now we can mark out our H12 H1 breaker zone, which is this entire gray box. Exact same steps as the previous examples. Right now everything is bullish and we can expect a reversal to occur in this level. So right now we're gonna see what it does. So let's see. Price was bullish here, took out the H12 liquidity high, and then we had the hourly market structure break. And you can see how price had a very violent reaction from it. It doesn't always happen like this. Sometimes it's a slow move like previous examples, but in this case you can see it's a very fast and violent move. And this also shows why the H12 H1 breaker zone is a very, very strong pattern for reversals. Remember, while catching reversals can be incredibly rewarding, it's a skill that requires patience and a plenty of practice. Don't feel pressured to predict every turn, because trading with a trend is a lot easier and a much safer route most of the time. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss an update. And drop a comment if you have any questions or want more videos like this. Thanks for watching, stay focused, stay disciplined, and I will see you on the next one.